So I turned $80,000 in cash into over 160K of equity literally overnight. And before you assume this is just another unrealistic investment pitch, it's not. I negotiated this deal personally and I bought one myself. And my client snapped up the rest of these properties too. And because we bought it so far under market value, the bank valuations actually came in well above what the clients paid. So in this video, I'm going to walk you through the full breakdown of this entire deal transaction, why most buyers never see opportunities like this, and how to spot a bulk discount deal before anyone else does. By the way, if you want the full breakdown of the exact formula I used to build my portfolio to over 150 properties, I put it all into a free ebook that's below called the $100 Million Vault. And it's helped thousands of people be able to scale their portfolio and get ahead financially through property investing. You can grab the free ebook in the link in the description below. Let me show you a $5.34 million block of units that I personally negotiated on behalf of our buyer's agency clients and myself. 26 bedrooms in total, 14 plus bathrooms, 14 car spaces, 14 unit on 15 Simpson Street, Northcote in Melbourne. First of all, it's 14 units, 2 one-bedders and 12 two-bedders in total. Each one has a car space on title. It's on 1,120 square meters. These were already strata titled, these 14 properties. I basically reached out and negotiated this property. There was a lot of competition for this particular deal. And one of the strategies that I've used in the past is to negotiate a bulk deal transaction if they are individual strata title. And I've done this with townhouse complexes, villa complexes, unit complexes, you name it. And basically the prices for these two-bedroom units ended up being $395 a piece. And the one-bedders ended up being about $300K. This is, at the time, was the comparable properties of 2 bedrooms that have sold in the area. 2 bedroom, 1 bath, 1 car, $550K. 2 bedroom, 1 bathroom, 1 car, Mitchell Street, Northcote, $697. Like, that's superior property. Clark Street, $560K. So prior to negotiation, we got individual bank valuations done through desktops, through our partner mortgage brokers, and they came at between $550 to $650. Let's say $550 as an example, minus $395. That's $155K, which from a purchase price of $395 is about 25 to 30% under bank valuation. Basically, out of the 14 units, I bought one of them myself. I ended up buying one of the ones that needed the most cosmetic renovation, just to basically take one for the team. 13 other clients bought the other properties with it. I bought mine outright in cash for $395, and then it settled. I refinanced it, and the bank valuation through Macquarie Bank, as what I went through, came back at $600. In that case, it was $205,000 bought under bank valuation. These will rent for, $450, $500 a week for a 2-bedder. So even the rental return, so let's go off, let's say $480 for the 2-bedders times 52 divided by $395. That's still a 6.3% gross rental yield, which is high. You probably rent out for more than that, bear in mind. I'll take you back to the e-brochure so you can see some more photos of this particular property. That's the location, 7 kilometers to the CBD. That's the cash flow sheet. So you can see roughly at $460 a week after, council rates, water rates, management fees, insurance, strata, interest-only component, all that stuff, you're negative about $50 a week. But that was prior to the rate cut. That was at interest rate 6.7. Now you're getting rates cheaper than that. Even as an example, recent sales on the same street, so 8 of 7 Simpson Street, which was sold in a couple of years ago for $570,000. 2021 Simpson Street, same 2-bedroom, 1 bath, 1 car, similar size, $549,000. Yes, this block needed a bit of cosmetic work, but it was nothing that would basically keep it from not being rented. The property was already rented. All of them had tenants in place, 6-7 kilometers to the CBD. No one in Australia can get better deals than I can. These properties were absolute bargain. They were absolute steal. Clients made minimum 150 to 200K on the way in just by signing a contract. Yes, they paid us a fee, but if they made 200K and they paid us even 25K as an example, like the 8 times return on their investment. It's better than anything else because, as an example, a lot of these other buyers agents, let's say a person has a budget of 500K, a lot of them putting in houses because people, unfortunately have an old school mentality of houses will grow the best, which is absolute bullshit. The houses do not grow the best. You can't get the type of leverage when negotiating houses as you do with buying bulk deals, as an example. Like, because, when you're buying a property like this, a 14 units at $5.34 million, there's not many people that can buy that compared to buying a unit, as an example, that's 400K. So those were $395, right? Yes, if they were listed individually, it would be a totally different circumstance. They'd probably go for 500 at least, depending on condition, maybe 550. But when you negotiate a block of units in one line and they're already strata titled, even from a valuer's perspective, when a bank sends a valuer out to value a block of units like this, they even discount subject a strata title block of units like that to a 5 to 10% discount. assuming they're being sold in online, because investors are only going to buy these if they're at a discounted price compared to if they were to individually sell. Everyone wants to buy a house with a bit of land and blah, blah, blah. But these, as an example, have land component. You're on 1,120 square meters of land. The land's probably worth $3 million. Now divide that by 14 units. You've got about 214K worth of land component. So even the actual units themselves were 395. And if you minus 214 because of the land component, like that's over 50% land component that you're buying, but you're getting a rental income. And you have a budget of 400, 500K. Like, what house are you really going to get anyway? You're going to buy out the middle of nowhere in a shit regional rural area because you want to show off to your friends that you bought a house. And, saying I bought a house sounds better than I bought a unit. Whereas I don't care if I show a person a property and it doesn't look nice or from a appealing, or they wouldn't live there themselves. Like, would I live in one of these units myself? Absolutely not. I've done my time. I grew up in Mount Druitt. I lived in, shitholes like that before. But this is a good location. So it's about the money that you make on the property. Basically, an existing clients buy one of these for $395. They put down, let's say, a 10% deposit plus stamp duty, legal fees, buyer's agent fees. They're probably into it for about 80K. So let's say 80K. But again, they made minimum 150K immediately by buying it, because even let's say at 550 minus 395, that's 155 at the bare minimum that they would have made. And again, you could probably get the valuations on a 600. Like, I got mine valued at 600,000 from Macquarie Bank. I got 100% return just by signing a contract. Whereas most people have to wait, 3, 4, 5, 6, 7 years for 100% return on their capital. And if you're serious about growing your portfolio fast without wasting years on buying average properties with average capital growth, then let's have a chat. You can book in a free call with my team. We'll walk you through how to apply this exact same strategy to your personal situation. Hit the link below and book in a time today. Now, this entire deal worked because we understood something the banks would never put in writing. There is a secret they rely on to keep most property investors stuck. And in this video, I'm going to explain exactly what it is and how to use it to your advantage. So go watch that video next. Definitely check it out.